Hey guys, it's Nick. It's a few minutes before the market close. Another crazy day for GameStop. Hedge funds are losing a lot of money. Let's take a look at what's going on in GameStop, what's going on with the latest hedge funds losing money, and what effect that's having on the stock market. So you see the Dow is down 640 points. The S&P and the NASDAQ are down about 2.5%, almost 3%. And on this down day, you have GameStop up 125%, BlackBerry up 30%, AMC movie theaters up a whopping 283%, and you have these pink sheet stocks that are 0.0013 cents up 160% and each. And they are SRMX, KYNC. These are the bottom of the barrel pink sheet stocks that people are now migrating to in the hopes of they become the next GameStop. And here's a look at the options on GameStop that expire in just 2 days. To buy a call option at a strike price of 320 bucks costs $97. So this thing has to go to like $420 in 2 days just for you to break even on your call. And the implied volatility on these things is like 800, 900%. So this is how crazy the market has gotten. It's insane. It's gotten so crazy that even the White House is talking about monitoring the situation on this market-wide short squeeze. And even TD Ameritrade is putting restrictions on transactions in GameStop and AMC. And Hedge Funds Melvin Capital and Citron came out today and said that they covered their shorts in GameStop. But did they really? I don't know. I don't trust hedge funds since Bill Ackman came out and said hell is coming when he was short the market during the pandemic shutdown. And just a few days later, after he covered and got long, he said all is great and we should be bullish and all of that. So they did say on CNBC that they closed out this short position in GameStop on Tuesday afternoon after taking a huge loss, said Gabe Plotkin. If you believe them or not, doesn't really matter because the short interest in this is still huge. And there are other hedge funds that are now getting squeezed or have been getting squeezed, but we're just hearing about it now. And one of them is Maplelane Capital, as this Zero Hedge article points out. So these are their put positions as of September 30th. So it's a little old, but back then they had about 1 million share equivalent puts on GameStop. There were also about 600,000 shares short of AMC and GSX, 1 million shares. So there's a lot of names in here that people on Wallstreetbets and other places are looking at to get long to squeeze these hedge funds that have these huge short positions. So this market has gotten so crazy that it's almost like in the beginning when people are looking at earnings and dividends, it's like you're eating lobster tail and filet mignon. And now we're at the point of dumpster diving in the back of a restaurant, fighting over a chicken bone and bidding that up to crazy levels. And so you see here, Zero Hedge put out this list of the highly shorted stocks, and now they're talking about micro caps like KYN Capital, which has a 399% short of its shares, and Saddle Ranch Media, which is 129% short. And those here are SRMX and KYNC, and you see they are up 180% on the day, even though they trade at 0.0014. And the reasoning here is that all the small traders, they missed out on Tesla or Neo or whatever. Now they set their sights on GameStop, and now that's gotten too high, and so they're looking for the next get rich quick thing. So they look at this and say it's trading at 1.4 mils, and if it goes to $1, they're gonna make 150 times their money or something ridiculous. And so this is what people are now pinning their hopes on as these other stocks like GameStop are up at $365 or whatever. They're looking for the next short to pile into to cause maximum pain for the short seller hedge funds. And so they're doing that with AMC, which is up 277%, and Nokia, which is up 45%, and BlackBerry. So a curious thing that's happening with this is that as the hedge funds have to put up more capital for their margin calls on their shorted stocks, they have to sell some of their good stocks to do that. As Zero Hedge pointed out, a basket of the most shorted stocks from January 21st up until now, if you had an index of it equally weighted, it went from 280 to 344, while the Goldman Sachs Hedge Fund VIP Basket ETF GVIP, an index of that is down from 160 to 124. So that's what's going on, is that it's kind of like if you had to sell your Ferrari because the payments on your Yugo went up, or your Yugo was totaled, and you're selling your Ferraris and Bentleys to pay for that. That's what's going on in the market. That's how crazy it is right now. And you see here, GVIP, the Goldman Sachs Hedge Fund VIP ETF, is down about 4% today. So a lot of people are going to be chasing these other names here in the hopes that it does another kind of GameStop, and that's what the market has become. So the market has gone from looking at investments and earnings and PE ratios to looking at the list of the most highly shorted stocks and just playing those in the hopes that you can squeeze some hedge funds to drive this thing a lot higher before they capitulate. So if you think that these hedge funds that are short GameStop and all these other stocks are going to lose a lot of money and capitulate and have these huge margin calls, a good way to possibly play this is by playing the Goldman Sachs Hedge Industry VIP ETF. And this is an ETF of all the top names in the hedge fund industry. This is kind of the golden list, and this is their best picks. And like I said, this is the Ferrari that they're going to have to sell to pay for the Yugo of GameStop and AMC and all these other crappy companies that are being bid up to the moon. And here's a look at the top 26% of its holdings: Liberty Broadband, IAC, Peloton, Change Health, Mercado Libre, Micron, Alexion Pharmaceuticals, Wells Fargo, PayPal, and Carvana. So you see, as the most shorted stocks go up like crazy, the Goldman Sachs GVIP ETF is going down because the hedge funds have to sell their good stocks to pay for their crappy stocks that have margin calls now. And here's GVIP stock chart, and you see from May it was down as low as like $55 and was recently $95. So it's a strong performing ETF because of the stocks it holds. But now look what's going on. It's gapping down because of these shorted stocks that are hurting the hedge funds that have to sell stocks like this in GVIP to pay for their margin calls. So I would say watch this for some look of some kind of capitulation and possibly buy it on the dip. I'm not saying you should do that. That's what I'm personally looking at to possibly do. I'm not saying I'm gonna. It's a possibility. I'm just watching it. So guys, that's the latest on this whole GameStop short squeeze and all these other stocks that are being short squeezed. And even if you're not looking to buy GVIP ETF, you might want to watch it for a day of capitulation, because that might be when all the hedge funds really puke out everything and you know that they covered everything at the top. And so if you're in the shorted stocks, it might be a signal for you to get out once you see that big capitulation in GVIP or in the stock market in general. I mean, the market's down 700 points right now after hours. So, you know, this market is crazy. I expect it to get crazier. Don't just jump into things blindly because there's probably some bad things coming our way in the stock market with this craziness going on. So trade carefully, invest carefully. Guys, if you like this video, give me a thumbs up, and I'll see you on the next one. Thanks for watching.